who are the major players, and do they control like most of the assets, even in the hedge fund industry? Do you know that?
Yeah, again, it's very important to recognize that pod shop approaches are only they're less than 10% of overall assets in the hedge
Hmm.
fund industry. So what's called traditional hedge fund managers, you know, like equity long short managers or global macro or multi-strategy, which may make many approaches, may approach investing in a lot of different ways, but not be in the sort of traditional pod shop methodology. That's still the vast majority of the hedge fund industry. And within the pod shops, there's really a couple of a handful of different funds that hold. There's a couple of big funds, Millennium, Valley Asney. Those are good examples of big funds that have the Citadels. Those are big funds. They have big assets. So Millennium now I think is pushing $80 billion with this most recent capital raise. And then I'd say there's a long tail of smaller funds that make up that up to 300 billion, give or take, assets in the overall pod shop strategies.
Do you have any insight into of the major ones that have been around a while, like what the I don't know what the return streams look like, and maybe like what the risk adjusted returns at the sort of at the fund level might look like?
Yeah, well, so there's the leaders, and this is very typical in the hedge fund type industry or amongst asset management in general. The the couple of leaders that have gathered the most assets on a historical basis have some pretty impressive returns. So you look at a Millennium and you look back through time, and they've got something like, I don't know, a 2 net of fees Sharpe ratio with zero correlation to the stock market or betas or traditional factors over the course of the last 30 years. Now, and the same is true for one or two more Citadel's type strategies. Then there is, I'd say, a set of funds that are stepped down, which look more like, between 0.5 and 1.0 Sharpe ratio with moderate correlation to asset markets, that make up the rest of the segment of the hedge fund industry. I think it's really important to recognize that when you're looking at that, Millennium has not delivered a 2 Sharpe ratio net of fees with zero correlation asset markets on $80 billion of assets, right? That 25 or 30 year track record, the vast majority of that track record is with much smaller asset bases. And so I think the real question when you're looking at these behemoths is that long track record actually indicative of the expected future performance? Or are you likely to see, when you move from 10 pods to 20 to 350, are you likely to start to see degradation in the alphas? Because you'd imagine that, the 10 pods managing $500 million or $1 billion have a very different alpha opportunity set than 330 pods, investing $80 billion over time.